guys, it's Shannon and Johnavie here, and we are going to talk to you about adjusting entries. Oh gosh, that sounds complicated, but don't worry, it's not. So what we do is we adjust entries after we have prepared the unadjusted trial balance in the accounting cycle. So that's step number 4, and what we're going to teach you to do is step number 5. So what is an adjusting entry and why do we need them? Well, have you ever used up a piece of paper? Well, that's part of your supplies, right? Well, whenever you journalize supplies, you only journalize when you get more, but you never journalize when you use up your supplies. So this is a supply balance, and the supply balance represents the amount you have left over from the last year plus any supplies you purchase during the year. In this example, we have $1,000 left over from last year, and we did not make any purchases. To figure out how much supplies we have left at the end of the year, we must physically count our supplies. In this case, there is $200 worth of supplies left because, let's see here, we used up $800 from $1,000, so we only have $200 left. To make a journal entry for this, you would make a supplies expense account as shown here, and you would debit that since it is an expense account. Now, we're just assuming that the fiscal period ends at December 31st. That's an important point. And we also have to credit supplies because supplies has gone down, and that is, you have to represent that. So this is how the final ledger accounts for supplies and supplies expense would look like. As you can see, they both balance. So thus, we need to make adjusting entries in order to update or balances in our accounts so we can keep them accurate, and also we do not want to have overstated balances, right? So another example of why we would need adjusting entries is prepaid expenses. So a prepaid expense is really an asset because we have already paid for something in advance. Since it's already paid for and it provides benefits to the company, it provides it now and into the future. So take insurance, for example. A company has to be insured, right? Just like a car or a life or a house. You pay insurance so that you'll be protected and reimbursed for your expenses in case anything happens, like a robbery. So not everyone's going to buy insurance on January 1st, right? So at the end of the fiscal period, let's say December 31st, some of the insurance is used up and some is still effective. To keep our books accurate, the balance in the prepaid insurance account must reflect this. To do this, we have to calculate how much we used up and we charge that to an account that we may call the insurance expense account. So this is a journal entry for when we bought prepaid insurance. So since prepaid insurance is an asset account, it is debited and bank would be credited since you bought the insurance and your bank balance went down. So the ledger accounts for this would be shown as such. Bank would be credited by $2,400, prepaid insurance would be debited, and insurance expense would remain zero for now. So first, we have to figure out how much insurance is used up per month. We have $2,400 worth of insurance for 12 months, okay? And what we have to do is we have to determine insurance for any amount, we have to divide the number of months in the fiscal period. So we divide 2,400 by the number of months in our fiscal period, which is 1 year, so that's 12 months. So that's 2,400 divided by 12. That gives us $200 per month. So this is a journal entry that shows how much insurance we have used up over the year, which is December 31st. If you don't remember, we bought the insurance on May 1st, and from May to December, that is 8 months. Therefore, we spent $200 per month. So what we do is we multiply the amount per month by the number of months to get how much we used. So therefore, 8 times 200 gives us 1,600. And these are the ledger accounts. And what that shows us is that we have $800 worth of prepaid insurance left since we used up $1,600. So now let's move on to late invoices. Now imagine that a company has purchased something after and received the invoice. So say something was purchased at the Boxing Day sale and the invoice didn't come until January 5th. We always have to properly represent net income, and we have to stay true to the matching principle, and that will be discussed later on in the video. So, accountants have lives too, right? They're not going to spend their New Year's like journalizing everything. What happens is that financial statements aren't prepared until 2 or 3 weeks after the fiscal period ends. Basically, when they get back to work, they're going to take the bill or the invoice and they're going to make an adjusting entry in the old books to stay true to the matching principle. What is the matching principle? Well, basically, the matching principle states that we must match our expenses to our revenue that they helped create in order to arrive at a proper representation of net income. You have to do this because you might understate or overstate your expenses, and both ways are bad. This could lead to investors getting the wrong information and not investing in your company, or you can also get audited. So, what's going to happen is that they're going to write December 31st for the date and credit and debit the corresponding entries. In this example, we'll be looking at utilities and advertising expenses for the month of December. The expenses were in December, but the invoices were not received until January 5th. However, these expenses help you generate revenue in December, so it should be recorded in the same fiscal period as the revenue. Thus, an adjusting entry is needed. So since there are expense accounts, the advertising and utilities, you would debit $300 and then debit $250. Then for accounts payable, you would add up both the expense accounts and credit $550 because you owe them money. Now for the other part. So this is the adjustment columns. Do you guys remember the 6-column worksheet? Well, we're adding 2 more columns. Don't worry, it's not going to be as hard as it looks. So remember, before we journalize, we have to do things on a worksheet. So we have to complete the 8-column worksheet to check for errors. Here's how we work it. So after you see the trial balance, there are these 2 columns that have adjustments under it. So that's what we're working with right now. So say we see supplies here. Actually, let's go back. So you see the supplies here, you have $1,480.90 worth of supplies. And we are going to use up $954.90 worth of supplies over the year. We're going to debit that amount to the supplies expense, and we will credit the same amount to supplies because we have used up the supplies and we don't have that many anymore. So what we've determined is that we only have $526 worth of supplies at the end of the year. What we're going to do now is we're going to go to the 8-column worksheet and credit how much of the supplies we have used in the credit row in the adjustments column. And then at the bottom, we're going to add a new account called the supplies expense at the bottom, and we're going to debit that for $954.90, as you can see here. You have to do these things in the adjustments column. Okay, and say we have an insurance account, right? We have $6,564 worth of prepaid insurance. So what basically happens is we used up $2,494 worth of prepaid insurance. So we have to credit that amount to prepaid insurance because prepaid insurance is an asset and it went down, while you debit insurance expense by that amount. We determined that the remaining value of our insurance is $4,070. So let's go back to the adjustment entries, okay? And to the adjustment column. So we have to debit and credit the corresponding amounts. So we have to credit the prepaid insurance and we have to make another account called insurance expense and then debit that. So we have late invoices, and basically we have to add up all of the expense accounts and debit the expense accounts as their expenses, and we have to credit the added up amount to accounts payable because we owe the people money, the people who sent us the bills. And in this case, we have $626 that we owe, and we need to put those amounts in the adjustment columns of the worksheet. So what we're going to do is we are going to debit $85 in miscellaneous expense, $45 in telephone expense, and $496 in truck expense. We credit $626 for accounts payable on the worksheet. Next, we have to add up the debits and credits on the adjustment columns to make sure that they are equal. And then we have to move everything to its respective places. We move all the expenses and revenues to the income statement columns, and as they're being moved, they're also being adjusted. Take miscellaneous expense, for example. The debit of the trial balance and adjustment columns were added up, and we got $2,036.65. Then, when we transferred all the assets, liabilities, and owner's equity accounts to the balance sheets, we had to adjust the columns. So, for example, take supplies. Take the debit, which is $1,480.90, and then we take the credit, which is $954.90, and we subtract the credit from the debit, which gives you the adjusted amount, which is $526. And you do the same for prepaid insurance. Once you filled in everything, you fill in the columns at the bottom. So, what we have in the debit column for the income statement is $146,984.90, and the credit column we have $213,821. Now this tells us that we have net income because the credit column, which represents revenue, is greater than the debit column, which represents expenses. So we find the difference of both, and then we write the difference under the debit in this case because that is the lower number in the columns. So now we go to the balance sheet. We add up everything in the credit and debit column. In the debit column, we have $125,107.50, and in the credit column, we have $58,271.42. So we have to figure out the difference, and you put the difference under the smaller number, which in this case is a debit column. The difference has to be equal to the difference you got in the income statement. So it is $66,836.09. And that actually is our net income. So what happens is we add up everything in our columns and for the balance sheet, and we get $125,107.50. So that's basically how we use the 8-column worksheet. Oh, whew! So now, this is what the journal entries look like for the adjusting entries, as we have shown before. Just take a look at it again, see if you understand everything. Basically, that's all we have to say for now. We hope we have expanded your knowledge, and if you guys have any questions, feel free to ask us tomorrow. Have a great night!